there's a decent chance that that's something that happens in some form in the next few years, where the metals exchanges just, start intimating that they don't have enough silver, and then somebody proves it by defaulting and paying out in cash on futures contracts instead of physical silver, and then boom, that's it. Then you get your triple digit silver with a bullet. There's no real upside limit to a tiny, thinly traded market that is suddenly in default. So I think $100 silver is a very reasonable target over the next couple of years, and it's possible that it really overshoots.
I do see a future in which there is actually a lot more physical supply coming from the mines, and that hasn't been the case recently. So we have an opportunity now, but it might be a reason why high prices eventually cure high prices.
The first hint something was breaking didn't come from a chart. It came from the way seasoned traders suddenly stopped laughing at long-term inflation warnings. John Rubino's argument builds from that shift. The big currencies aren't wobbling because of a single crisis. They're trapped under decades of accumulated debt, and the only politically survivable exit is inflation. Not the mild, convenient kind policymakers talk about, but the steady erosion of purchasing power that quietly shrinks the real weight of what governments owe. People used to treat this as a distant worry. Now it's showing up in policy choices, market signals, and the behavior of the players who usually act last. Central banks have already made their move. They're accumulating gold because they know how these cycles end. Gold's market is deep enough to absorb their buying without dramatic spikes, but strong enough to build a persistent upward trend. Institutions and everyday investors are simply aligning with the same direction of travel. Silver is where the story turns sharper. It's small, thinly traded, and essential to industries that can't pull back. That mix creates a market that can jump violently if something snaps. Rubino warns that if just one major futures participant can't deliver physical metal and is forced into a cash settlement, that's the ignition point. A break like that doesn't lift prices slowly. It sends them straight up because there's no ceiling when real supply is strained. $100 silver target fits that setup. And if it overshoots for a while, that wouldn't be unusual. The smart approach at that stage is to take profits in stages, not walk away entirely, letting the final burst finish on its own terms. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
People have just concluded that we have no choice but to inflate the dollar away, and the euro and the yen and the pound sterling and the yuan. All the big currencies have to be inflated away to cover all the debt that we've taken on. And people have kind of known that in theory for a long time, but now it's becoming more real. And you're seeing the central banks of the world just snarf up all the gold they can get a hold of, and people are taking their cue from those central banks. So there's a lot of gold buying across the board now. And then with silver, silver always had two really good stories. It was a monetary metal attached to gold in a lot of ways, and an industrial metal that we actually really need. And that. If it was just an industrial metal, we would still be running a silver deficit that'll turn into a shortage that'll blow the price way up. So I think people are recognizing that too, including the U.S. government that just named silver a critical mineral,
right,
or critical metal, and meaning that the U.S. economy does not function without the metals on that list, and silver is one of them. So now there's going to be a lot of stockpiling, where if you make, say, missiles, for instance, or solar panels or whatever, you've got to have a certain amount of silver available in order to meet the orders that are coming in. And you can't just wait until the day before you need it and buy it on the spot market anymore, because spot markets are unreliable, especially for crucial things like silver now is. And so what you're going to do is stockpile. You're going to buy ahead of time. And I think that's a lot of the demand for silver too, is people who might not be using it right away, but they want it to be there when they need it. You put those two things together, and Gold is not that huge of a market, but it's much bigger than silver. So with central banks buying gold, that's a wind at gold's back for as far as the eye can see. And with silver, the fact that it's just a tiny little market, it's thinly traded. There's just not that much silver out there, and we're using up above ground stocks at an accelerating rate. Um, so I think there's a real possibility of a silver squeeze here that people have been talking about for a while. And I think there's a decent chance that that's something that happens in some form in the next few years, where the metals exchanges just, start intimating that they don't have enough silver, and then somebody proves it by defaulting and paying out in cash on futures contracts instead of physical silver. And then boom, that's it. Then you get your triple digit silver with a bullet. There's no real upside limit to a tiny, thinly traded market that is suddenly in default. So I think $100 silver is a very reasonable target over the next couple of years, and it's possible that it really overshoots. So I think 100 is where you start taking serious profits, but don't sell everything, because there's the potential for the next parabolic run, and that could come sooner rather than later if silver breaks into 100. What you want to do with any kind of investment, but with commodities in general, and gold and silver specifically, is you just want to be in the on the train that's leaving the station. You don't know when it's going to leave, but you know what direction it's going to go eventually, and you just want to be there. You want to be on the right side of history, which in the case of commodities is shortages leading to much higher prices because of either industrial demand or monetary demand. Uranium and copper, it's industrial demand. They are needed for next generation power plants and power transmission. Silver is needed basically everywhere, but also as a monetary metal. It's the kind of thing that if gold gets too expensive, which for a lot of people, it is in a visual sense, like you put a grand in the palm of your hand, and it just looks like this small gold coin. It's like the size of an old silver or $50, but it's worth $4,000 now. And then you think, all right, what does $4,000 worth of silver look like? And it's a nice big pile of beautiful metal sitting on your table. So at this point in precious metals bull markets, people normally start doing that kind of a calculation. All right, gold's going to go up, but boy, is it expensive. Look how much silver I can get for the price of one gold ounce. And then people start buying silver. And then you get the parabolic move up because, like I said, it's a very thinly traded market. You get just a little bit of extra generalist money coming into the sector, or at least a little bit by comparison with generalist money. And it'll push silver way up.
The way Lobo Tiggre lays it out, the demand side isn't the mystery. AI buildouts, EV production, and the broader electronics ecosystem are all pushing silver consumption higher every year. None of that is slowing down. The interesting twist is how tightly silver's future supply is tied to copper. Most new silver comes out of the ground as a byproduct of big copper mines, and the world is about to need an enormous amount of copper to feed the same tech expansion. Eventually, that surge in copper output should lift silver's supply too. Here's the thing, eventually doesn't mean soon. Even if every government flipped green lights on new projects today, you'd still be waiting years before any fresh metal reaches the market. And the pipeline of shovel-ready mines is thin to begin with. Anyone trying to draw neat supply-demand curves beyond the near term is giving you confidence without certainty. So Tiggre focuses on what can actually be judged, the next year or two. In that window, the backdrop looks solid. Gold carving out a firm base around 4,000 signals real strength. Silver reclaiming the 50 level isn't the kind of vertical spike we've seen before. It feels steadier, driven by fundamentals rather than a blow-off rush. That's the kind of setup that usually has more room to run. Let's get back to the interview.
The bulls here point out about this, but there is a lot of supply, physical supply, that is not counted as supply. And there's a big argument between, what's his name, the other silver guy that people hate even more than me, from CPM Group.
Jeffrey.
Yes, right. And the Silver Institute and so on, and whether you count investment silver as supply, and I have to say that I think Jeff has a point in that at the right price, yeah, people will sell their silver. I mean, it's just not true that all the bullion in the world out there none of it would come to market if there was a bid for it. And we see that, and we're not just talking grandma's teaspoons and stuff. I'm talking coins and bars. I mean, heck, they're bars. Coins are a little bit more painful to sell. Despite my Darth mantle, right? I don't want to sell my silver coins, especially my Canadian wolves. That seems like cannibalism. But a silver bar is just a bar. That's meant to be made into other things. So I do think that there's a lot more silver that could come to market under the right conditions. Hold on to the rotten tomatoes, dear silver bulls. But that's not quick or easy. It implies much higher prices.
Yes.
But then here's the thing. Like going forward, this whole AI thing and the EV thing, it's bullish for silver in a way because it goes into a lot of things. A lot of electronics, but it also is going to incent a huge increase in the copper mine output. And the copper mines are the number one source of silver in the world. So at some point, the good news is that these big copper mines, they're so big and so expensive that even if you got the permits today, it'd take years before that supply hits the market. And there aren't many that are shovel ready now. So I don't think this is going to be a problem for tomorrow or even in the next couple of years. But there will be a point when, push has come to shove and NIMBY thinking is given way to that we got to have critical minerals, including copper. And at some point in the future, I do think copper supply will ramp up. Whether it be enough to keep up with the demand for copper, I don't know. But that will produce a huge increase in silver supply. Now, will that outstrip demand? I don't know that anybody knows. I certainly don't have that data. No, I wouldn't believe really anybody who guessed and had a fancy chart saying here's what might happen. It would all be a bunch of hypotheticals. But all I'm saying in answer to the question, I could get my Darth mask out here, is I do think there's a future because silver is a byproduct. I do see a future in which there is actually a lot more physical supply coming from the mines. And that hasn't been the case recently. So we have an opportunity now. But it might be a reason why high prices eventually cure high prices. But for me as a speculator, my time horizon is a year or two. And so I'm really not worried about this. I'm just answering the question. And right now, we talked about gold consolidating around 4,000. That's great instead of a peak. For silver to be back up over 50 as we speak, last time I looked, it was close to 51. That's completely different from the previous silver peaks up around 50. So I think the setup is very encouraging. So all those rotten tomatoes, if you want to throw them at me, I mean, it's striking, Daryl. I just got a message from some guy because I said something positive about silver. And he's like, oh, have you finally turned bullish? These people just don't listen. Okay, I mean, just because I don't say it doesn't have to go to the moon tomorrow, that doesn't mean I have not been a silver bear probably for 20 years. I should have been in 2011, but I wasn't. I've just been a cautious bull, but somehow cautious bull equals bear in many people. Pardon the rant, but it blew my mind. Like they don't hear what I'm saying. I'm saying, listen to everything I just said talking to Daryl right now. I'm giving you a positive outlook. But if it's not as positive as you want, that doesn't make me a bear.
Something deeper is taking shape across the metals landscape, and you can sense it in how the conversation has shifted from casual curiosity to genuine concern. When veteran traders stop brushing off inflation risk and central banks quietly stack more bullion, it signals that we're no longer dealing with hypothetical long-term scenarios. Debt-heavy currencies are drifting toward the only politically tolerable release valve, a slow, grinding dilution of their value. That kind of environment rewards assets that don't rely on trust in policy, which is why gold keeps drawing steady flows from institutions and sovereign buyers who plan decades ahead, not months. Silver, meanwhile, sits in a far more fragile position. Its industrial pull is intensifying at the exact moment its supply chain is stretched thin and overly dependent on copper projects that take years to reach productive levels. The setup creates a market where even a single failure to deliver on a futures contract could expose just how little real metal is available. If that break ever comes, the adjustment won't be polite or gradual. It will be vertical because prices can't stay anchored to paper once the illusion of abundance vanishes. All of this combines into a moment where both metals are being shaped by forces that are bigger and more structural than daily trading noise. Gold is behaving like the hedge of choice for entities preparing for a long cycle of currency dilution, while silver is evolving into a pressure point that could swing violently once reality outruns the derivatives market. The path ahead looks less like a smooth trend and more like a reset waiting for a spark. With so many cracks now visible in policy credibility, supply pipelines, and paper market stability, the real question is whether the next break arrives through inflation grinding higher or through the physical silver market reaching a point where scarcity can no longer be masked. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.